Hi, I'm Heather Sugg, reporting for FinTech Futures from Money20 USA. I'm pleased to be joined today by Jacob Olins from WorkWave. Welcome.
Nice to be here. Thanks for having me.
Thank you. So, Jacob, you are VP of FinTech at WorkWave. Tell us a little bit about your role and about yourself.
Sure. So I've got a history that started in banking, started in financial services in a payments innovation group at Citibank. And then over the years, just had more and more of an affinity for software platforms and the ability to distribute financial services through software platforms. So, WorkWave is a vertical SaaS platform that supports field services companies, and I lead the financial services, what we call the FinTech business unit there. We do a lot of payment processing, we do some lending, we do some payroll, earned wage access, a whole bunch of different products that we've got that basically support our customers' businesses and are generally adjacent to money movement.
Okay. Generally adjacent to money movement. I like it. Yes, there's a broad spectrum that you touched.
There's a lot of stuff. Yeah, there's a lot of opportunities.
Who's a typical customer for you?
A typical customer for us would be a small or medium-sized, in some cases large enterprise business that runs a field services business. So that might be a general contractor of some sort. It might be somebody who mows your lawn. It might be a business that does janitorial work or security work. The common theme is typically you're using trucks to mobilize a mobile workforce and perform services in the field. Cleaning, security, pest control is a big one. You're running that business, you're communicating with your employees where they need to be, what jobs they need to do when they're there, and you do all of that on our platform and through our mobile application and back office applications.
And then very pertinent to people that are out in the field, you have your own payments processor. So how does that apply to them and how's it being used?
Yes, absolutely right. So we're at PayFac, we are our own payment processor. What it does is it allows us to tailor our payment services really to the needs of our specific customers. So a lot of our customers have a big portion of their business on subscription billing. Their customers are signing up for a monthly lawn care service or a monthly pest control service. And so we're tailoring into our payments offering things like account updater, so that if they've got a card on file and that card expires or it's closed or canceled, we're automatically tokenizing the card, and so that service never gets interrupted. Our customer never has to reach back out to their customer in order to capture another card. So that saves them a lot of time. And then what we do is we try to look at, hey, what are all the different ways that our customers are taking revenue? And so, a big portion of that is recurring services. That's usually a credit card payment. Another portion of that is going to be commercial services, and so we'll facilitate ACH payments for those kinds of services. And then a portion, typically 20 to 30% of a lot of our businesses, is large ticket services. So that might be a fumigation job in the pest control industry, or it might be a tree trimming job in the landscaping industry. And that's a large service that many consumers don't have the money to pay for that, but it's an emergency service. You don't want a big tree branch falling on your house. And so we offer financing as well. And so our customers are able to finance their customers. They get paid in full as soon as the service is complete. And then we take over that collection from the consumer over time.
Yeah, a nice benefit on the consumer side as well than having that be a seamless, easy process for them.
Yeah, absolutely. Easier process and funding when they need it, because a lot of these services are essential.
Vital, exactly. So what does critical mass look like for you?
For us and for the FinTech business unit, we've got a lot of opportunity in a lot of different money adjacent sort of flows. And so, the payments acceptance product, that's our most scaled product. That's definitely at critical mass. Virtually every one of our customers uses that for the majority of the payments that they're accepting from their customers. What we're really working on now is expanding more and more of those financial services offerings. I think, we do it in the same way. We will oftentimes launch a partnership first, see if that's really resonating, and then we build into our product the experience so that it really seamlessly fits into our customers' workflows. So let's say financing, as an example, that's a newer product for us. You want to offer that to the technician at the right point in their process. So if they're out doing an inspection, they're quoting a service, you want them to know, hey, I can offer this financing, and not just, hey, it's available, but I can give you this job for $5,000 or X installment payments of $150 a month. We want them to have it in context so that they don't have to think about, oh, can we offer financing on this job? Can we not on that job? Right? They're there to do a job. They're there to perform a service. And we want our mobile application and our platform to make any of that money movement, financial related activity super obvious and not require like additional training.
Do you find that the financing options are increasing spending power?
Yeah, that's a really good question. I think when a technician is able to have some of the insight into what a customer can afford to spend, they might recommend different services than they would otherwise. So, if you're totally blind to your customer's financial situation, you might err one way or another way that might actually alienate the customer from that sale. If you're getting more insight, and it's obvious that the customer is the one opting in the first place, they're saying, you know what, I'm interested in financing, then we're able to provide our customers with visibility into what that financing might be, and they might say, you know what, you got a termite job that's absolutely essential. We got to do that. But we've also noticed there's some holes where some rodents are crawling in, and maybe it's a less significant service, but the customer's happy to have everything done that they need done at that point in time.
That's fantastic. What's coming next down the pipeline for you in financial services?
A couple of big things for us this year. We've got a bill pay product that's going to be coming out early next year. That's really exciting for us. It's going to enable our customers to basically outsource their entire accounts payable process to us. It's going to save a lot of time for our customers. It's going to reduce a lot of error rates. And the customers that are most excited about this, what they're saying to us is, hey, I'm spending time every week supporting 3 or 4 different accounts payable processes. If you can sort of turn that into one and reduce the error, then I can take that staffing power and put them on higher value projects for me rather than just, auditing and error tracking. That was a really cool conversation I had just last week. We've got this customer who's excited about our bill pay product. They're also moving on to our payroll product. And that's another area where we've got some really exciting innovations. Earned wage access is been a really, really powerful employee retention tool. And so we're deepening our earned wage access product to make it just much more accessible for our customers' employees.
How are you deepening it?
Just embedding that user experience right into the product. So, historically, earned wage access is something that employer will sort of socialize to their employees. And depending on how engaged their HR department is or what kind of communication strategy they've got with their employees might not be aware of all the benefits that they're providing to their employees as an employer. And so we're able to use that same real estate that these employees are using every day to punch in, punch out, know where they're going, what they're doing, to help our employers effectively market to their employees, hey, here's some additional services that you're getting, as virtue of being an employee of this company.
Very nice. Now, WorkWave is somewhat unique in the fact that a lot of what we're seeing here in the vendors at 2020 are VC companies, and they are stabilizing their growth through that. We heard from in the New York Stock Exchange about what they're expecting with IPOs. But you've gone the PE route. Tell me about why you decided to do that and how it's affecting your business.
Yeah, I think WorkWave's been really successfully private equity owned for a number of years. I think, it comes with a different set of opportunities and constraints. I think one of the things that it encourages us to do is just be really resourceful. And so, we're going to be more inclined to launch a partnership as a way to validate whether a product is going to be a fit for our customers, then try to build something, big up front. So I think just operating, within constraints makes us more thoughtful about the products that we're bringing to market, makes us more thoughtful about the customer experiences that we're bringing to market. And I think, it goes a long way, and we've got the customer loyalty to prove it.
Yeah. And so given your years of experience in private equity, what would you advise for companies about how to remain competitive in that space?
Yeah, I think, the financial services, and it's such a niche, right? But it's like vertical software. You're used to selling software. You always think about software. And so a lot of the financial services opportunities are just not second nature to your customers are taking advantage of these services one way or another today. They're probably procuring something from a bank. The value that you've got and the experience that you provide as the vertical software provider, the data that probably your customer is already using, but in a really clunky way, in order to procure the financial services that they need, you can do that for them. I think that's one of the biggest pieces of advice that I would give. Look at where does your product support money movement? Are you in the accounts payable flow? Are you in the accounts receivable flow? Are you in anywhere that money is moved, the payroll flow? Do you have any kind of insight into how that money is being spent or being earned? You probably have a really big financial services opportunity that you might not be capitalizing on.
Very nice. I like it. Well, Jacob, is there anything else you'd like to add?
I think that's about it. Yeah, this was really wonderful. Thanks so much for having me.
It's been lovely. Thank you.